to another wonderful Water Cooler Wednesday. And look, we've got a special guest today. We've got
Right.
guests with us.
It's three of us.
Trio, we united.
Yes. So, last week we did a little touch on credit repair, and of course, we told you we had to bring the expert that
The
we did
expert.
not have.
The one. The
Right.
only.
Here we go.
Right. We did not have all the information that you needed, and so that is why we are here. But first, let me tell you who I am. I am Dion Branch with Allure Dream Home, brokered by EXP, and we like to hold your hand throughout the whole transaction process to make it easier. And we start with people like Maurice sometimes in order to get you where you need to be. And
Absolutely.
so joining us as well is our co-host.
Hey, it's Lisa J, House Money Mama from Nexa Mortgage, where brokers are better. Here to service all of your financing needs in the mortgage platform. We got your residential, commercial. If you invest in real estate, we got you.
Yes, yes. So we're here. We're here. And so we gave you a little tidbit. We have with us Maurice Holmes, and he is from the Credit Restore Station.
She emphasized that look.
Right. Yeah. Hey, Maurice.
Hey, hey, hey.
What's up?
Uh, Always a good time with Lisa and Dion. Thanks for having me on again. I am Maurice of the Credit Restore Station. No stranger to good credit and no stranger to bad credit. I always like to give my testimony. I had 27 collections and 3 judgments when I started working on my credit back in 2008. And yeah, after about a year and a half learning about the dispute process, I was able to get 20 of those collections removed from my credit. I settled 7, and I was able to purchase my first home for my family. So I know bad credit all too well because I couldn't get approved for a piece of gum. But
Right.
now I'm best friends with good credit, and I want to keep it that way. So
Mhm.
thanks for having me.
Right. And I would say don't feel ashamed if you have bad credit. Just make sure you make a change, right? So contact us, contact Maurice so that he can definitely help you to get where you need to be. Everybody doesn't have the great credit like you think they do. They all need to
Right.
some type of repair. And we're here to help you.
Yeah.
That's a good point, Dion. I think that's something good to focus in on just a little bit before we get started because you're right. A lot of times that is one of the biggest things I think that keeps people from moving forward is the isolation. They feel like they're the only one.
Yeah.
They
The
for some
same.
reason they think they walk into a room and they got 560 written all over their forehead, like everybody know that they got bad credit. They can look at me and tell I got bad credit.
Right.
They cannot. Even I
Right.
can't do that. I've seen a lot of people bad credit, but I think a lot of people do feel that way. That it's
Yeah.
kind of like being marginalized. They feel like isolated. That they're the only ones dealing with this. Honey, you are not.
You're not. And
I,
the thing about it too is some people they'll be like, I will speak to them and they'll say, well, my credit's not all that great. And then I always ask, are you above a 600 or how's your score? And so they may say, I'm at a 640. I'm like,
Right.
actually, you're kind of good. You're okay.
Right.
It's not the best. There's not a lot of people in 700s and 800. But I mean, Maurice is gonna get you there.
that's
He's
right.
gonna get you close at least.
To piggyback off what both of you were saying, I saw that a lot where people don't even know their score because they're scared to look,
Mm,
and it, like you said, Dion, it's nothing to be ashamed of because what you don't know, you just don't know,
right.
but when you know better, you do better. And I always say you can't get somewhere by going nowhere. So that first step is to take a step by looking to see what it is. And it's you'd be surprised how many people think their credit situation is just so bad and all they're wrestling with is no open revolving credit and a couple collections.
Yeah.
Fixes. They don't even realize how simple. They just see that 503 and think, oh, it's just the end of the world. But they don't realize how easy it is to flip that 503 to a 703. You know.
Yeah.
So,
Yeah.
yeah.
So I definitely can say that at some point I was there. So everybody does it. Right. Don't want to go there. So all right, Maurice, you're gonna bring us some tidbits today. I think one thing we were gonna talk about is the student loans. Like what's happening with the student loans?
So that's something I've been seeing a lot more lately. I'll say as of probably the start of the year, latter part of last year, seeing a lot of people's student loans in a negative stance. Like I'm used to seeing people's student loans deferred, or if they're not deferred, they may have some lates on there, and it's just as simple as calling and getting them back deferred or entering into an income-based repayment plan. But a lot of times people were able to easily get them back into some sort of deferment, or forbearance. Haven't been seeing that a lot lately. Have been seeing a lot of people's student loans reporting negative. And the thing about student loans, they don't just start reporting 30 days, 60 days. They wait 90 days and instantly just hit you with a 90-day late. No build up, just 90 days. And a late is a late. 30 is bad, 60 is bad, 90. They all look bad. But to go straight at a 90, that appears worse, from the eyes of a lender. A lender of any sort, to see 90 days late, because I always tell people, put yourself in the shoes of a lender. If I want to borrow $100,000 from you, what's the first thing you want to know? Is that I can pay you back.
Right.
Right.
And you're gonna use my credit report to determine, how consistent I am with paying bills.
Paying other people back.
Yes.
Right.
Yeah. So with the student loans, that's something that I'm seeing a lot on people's credit. And there was this thing I believe was called the on-ramp period, where it kind of shielded borrowers from the negative reporting while they're transitioning back, into that repayment period for like 12 months. But I think that ended in October of 2024, so that played a part. But yeah, so I always tell people, call these people and talk to them,
Yeah.
Don't just do nothing, because now you're just tanking your credit, So that's just something I've been seeing a lot of with clients as I do their evaluations on their report lately. So I would just tell you, if you can't get into some sort of forbearance, call about an income-based repayment plan. I know a year or two ago, those income-based repayment plans had payments that were just extremely low, and it kept your student loans, reporting positive. And I remember looking at credit reports back in the day, they would start reporting negative. And soon as the client would get into the forbearance of whatever sort, the deferment, it will remove the negatives and everything would report back positive. I don't think they do that anymore, but those were the good old days.
Yeah. Today I received a call from a client, and he was like, hey, he was ready, but he said, I had to wait a month or two because all of a sudden my student loans hit my credit and took my 700 down to a 560. He's like, it was a big drop. He said, I was so shocked that this had happened. He had no clue, but he, did the repairs, did the work in order to get it back up. So he was like, I'm ready now. I said, okay.
That's been the testimony of anybody that's experienced that. It just came out of nowhere. And I think it was part of it has to do with some of the bills that expired last year. But I know there's some legislation changes in the Big Beautiful Bill that just passed as well that could impact that. But yeah, the people that I've seen, it just hit them out of nowhere because you get comfortable, ignore those student loans, they in deferment, you don't know what's going on with them as long as they ain't reporting negative, and then it just hits them out of nowhere.
All of a sudden.
And it's devastating.
All right.
So what have you seen people start to have some success or some kind of results from reaching out to the servicers? Or?
Yeah, definitely getting into that payment plan. Positive
Uh-huh.
activity will start reporting, and they'll put
Okay.
that positive activity reported, and you'll gain points back that you've lost from that negative reporting. So,
Okay.
yeah, definitely want to jump on it. But if you can avoid it, then do that. And one way to avoid it is just knowing what's on your credit and checking in on the council.
And how would somebody do that? How would a person, keep up with their credit, and how would they know what's on it?
Oh yeah. So there's really no excuse to not know what's on your credit. There's too many avenues to get your credit from. Annualcreditreport.com, where you can get a free credit report from all three bureaus. You can get it online in most cases. Sometimes there's hiccups with the system and they'll have to mail it out to you, but they will not give you scores unless you pay. They will only give you free reports. My all-time favorite is Experian.com. I'm an advocate. They ought to be paying me for marketing them, because everybody get an Experian.com account. And one of the big reasons is a lot of credit repair companies are going to tell their clients to sign up with MyFICO, Identity IQ, and pay this $24 to $39 a month fee. And I'm big on advocating for the client to not spend money unnecessarily. So with Experian.com, and I will say this, we do get a kickback too when you sign up for those credit monitoring services through our link. Yeah, we're usually affiliates, but I don't go that route. I use Experian because I definitely want that client to keep that little extra money in their pocket, because we may need to use it to settle an account possibly. But with Experian, they give you your Experian report for free under their free account, and they offer you a free trial once a month where you can see all three bureaus, all three FICO scores.
Okay.
And then once you review it, go to your account settings, switch it back to free membership. So you do the upgrade, switch it back to free. I've been doing it for years, and they allow it. So why not take advantage of the loophole and save some money? And they will, with Experian, you can see your mortgage score as well. They'll show you your FICO too, just for Experian. They won't show it for the other two bureaus.
Okay.
So it's just great to have, and it's free. Why not?
Nice. Okay.
All right.
Good
That's
deal.
a good
Thank
tip.
you.
That's a good tip.
Yeah, all time.
All right. I was gonna try to. It's gonna show Experian. So
There we go.
Experian.com.
Go there.
Down below.
Go there, right? So
Free account.
definitely get your information. All right, Maurice, what else? What other tips you got for us? What else is happening?
Oh,
in the
another thing I'm
credit world?
seeing in the credit world is a high use of BNPL accounts. Y'all know what BNPLs are?
BNPL. No, what is that?
Buy now, pay later.
Okay.
BNPL
The
accounts.
new layaway.
That's
The new
right.
layaway, but I get it right away.
Yeah, that's it.
Right.
Yeah. So those they're very helpful and useful. They right there when you're paying for stuff online, it's a click of a button, you got it. But they have a downside to them. The downside to them is they decrease your average credit age. I had a client literally with 20 Affirm accounts. There's different categories of credit. There's your usage, your credit history. Then there's your average credit age, and that's why you want an aged profile, because the more aged your credit profile is, the better it looks to lenders.
Right. The more
your experience, more stable. So when you keep on opening, every time you open a new account, it decreases your average credit age, because it's your average credit age has decreased because you have a baby account, showing up on it.
Right.
So when you open 20 different Affirm accounts, that's 20 different purchases, and that's going to be 20 different accounts reporting on your credit. And every time one hits, your average credit age, decreases. And another thing, it's all about appearance too. Some people, when they start off, they have to get like a First Premier credit card or Credit One Bank. I had a First Premier, had it for years. It was my starter card. I literally just closed it 2 years ago. Don't know why I kept it, because they was charging me a monthly fee and I never used it. But that appearance piece, when you have your major lenders like Amex or something looking at your profile, they're going to look at that. And if that's all they see is the first premiere, they're going to know and categorize you as still a risky, a risky borrower, because they know these are predatory type of lending type companies. And, if this is what you have, sometimes that's all you can get. So no one else is willing to take a risk on you. We not either, and it's the same thing with those,
right.
We not either. Those buy now, pay later accounts. When they see a lot of those, it kind of brings up the question of your, how financially responsible you are. Now, some people may just like to use them, but it's still about that appearance, how it appears on your credit profile.
Or another thing is that, come from the perspective of a lender, or coming from the perspective of the credit bureau itself, when they look at accounts like that and they see that's how you're basically paying for everything, it still gives the appearance of the same philosophy that there is with the revolving credit, that if you have, a $1,000 credit limit, let's say, and you done spent $999.95.
Love it.
What that really means is that you don't have the means, just to responsibly handle credit, because for them, 10%, correct me if I'm wrong, is ideal. Yeah. If you have 90% available, then that means you able to pay for your own life, and you not living off credit cards. So if you have to pay for something through a firm, then that means, what that essentially means is, I can't pay for this right now. I don't have the money. Really, another way to say that is, I can't afford it.
Yep. Right. Beyond my means.
Yep, it's beyond my means. And so that's the philosophy behind that. I think why the credit bureau, and I didn't even think about that as far as the age, so I'm glad that you brought that up. I hadn't really thought about that.
Yeah.
I just
because I didn't know that they were reporting like a record each time that you open up a firm account. Yeah. I know I've had clients in the past that have done some things and thought, oh, well, it's not gonna mess up my purchase. But the underwriter was looking at the transaction and saying, hey, why is there like a new transaction happening all the time? And the thing was that they had a firm credit card. And they were using the firm credit card to do things like purchase food.
Wow.
So
and I wouldn't be surprised if some people think that because they're using credit, that it's actually helping them. Yeah. I wouldn't be surprised if there's a misconception that, well, if I use this credit, then, and I pay it back and I let them see, that I'm responsible. But for that, it don't. It's not the same.
That's absolutely the thought process, because I hear about it with credit cards all the time. And I always say, especially for people of color, I'll say, because we're like the biggest consumers, credit card companies love to see us coming. They love to see us swipe that card everywhere there's a slit,
right?
Rack it up, and then pay that minimum due, because they finna make some money off you on that interest, and it's based off carrying a balance. And people think, well, I have to use it so they don't close it. I use my credit cards. I got 21 credit cards. I carry 2 at a time. I'll use them 6 months, a year. I'll switch them out, use the other ones. Who is it? Target just sent me a letter today saying if I don't use my card over the next 2 months, that they're going to close it because I have 0 activity on it over the last 12 months. Okay. So I get that letter, I use it, but guess what? They're still reporting on my credit report every month. So I'm just building up the history and not paying interest. So they're not making no money off of me, because
right.
keep them at 0.
So they're not happy with that.
Right. Right.
And close it up. Yeah. So.
And then when they close you, it does reflect negatively, right?
It doesn't reflect negatively. It'll say account closed by, if the account is closed by the lender, then that can look negative. But if it's closed by the consumer, I don't think it's as negative, because if you got good payment history and you just close the account, it still looks positive. You will take a dip for that account closing, but as long as you have enough positive activity, you won't even feel that dip. But I always tell people with credit cards, if it's not a card that has a monthly charge, keep that card open, put it to 0, and throw it in the drawer. It's better to have and not need than need and not have.
That's true. I say that all the time.
Oh, great minds think alike.
All right.
And I think to kind of piggyback off that a little bit too. With not using them, the way the algorithm that they use to calculate the score, usage is part of that. So when you close an account, well, maybe I shouldn't say usage. In this case, I would probably say age is part of that, right? So when you close an account, even though it might be a small dip, I think the reason for that probably has to do with just like how you were saying about the Affirm accounts. It messes with the age of the open accounts. So now, and how many? Like, you no longer have the same amount of open accounts as what you had before, and now that can't factor into the age of your average accounts because it's a close, right?
So I think the age will still factor in as long as the account is still present on the credit profile.
But, even though it's closed.
Yes, but that usage will definitely change. That overall credit usage, available credit, I mean.
Right, available, right.
That decreases, and that can impact you in a negative way, because if you got $1,000 credit limit off 2 cards, and they both 500 each, and one of them is you use 500, so it's 50% usage now overall. And you close the open one, now your usage is going to say 100%.
Right.
It will have an impact in that way.
Yeah, that's it. I like how you broke that down with some numbers. That makes sense. So,
yeah, definitely.
All right, go ahead, Dion. Sorry, I jumped in there.
No, I was like, this is definitely some good information that we're sharing. Do you have one more tidbit for us, or?
I will say just make sure we're always paying attention to our credit usage. Like Lisa said, 10% is ideal, but hey, 0 is even better. Make sure you're not late. Call these companies, these credit card companies. If you're getting tight and can't make a payment, they usually have some sort of what is it called? Hardship program, that they can put you in to assist you if you can't make payments. And if you're struggling with high credit card debt, just your usage is up and you're struggling making all these payments for credit cards, something you can do if your scores are still fair. If your scores are still in the low 6s, mid 6s, you can do what's called, I like to call, recategorizing your debt. So your credit card debt is categorized as revolving debt. Revolving debt impacts 30% of your credit score. Installment accounts like loans, car notes, those are installments. They have the same monthly payment every month. Revolving, the payment changes. Installment only impacts 10% of your score. So if you were to, let's say, had $10,000 worth of credit card debt, interest eating you up 29% every month, only a small percentage of that monthly payment is going towards the balance. The rest is going towards interest.
Yeah.
You take that $10,000 and you apply for a loan, a personal loan. There's different companies, Upgrade, Achieve. Let's say they give you that $10,000 loan. You take this $10,000, pay off all your credit cards to 0. Your score is going to shoot up because your credit usage is now going to 0. You're going to get a new account on your credit for that loan, and it's going to be classified as installment. So you move this $10,000 debt from revolving to installment, and your score is only going to dip a little because installment only factors in 10%. So
I like that.
A way to boost your score when you're struggling with credit card debt, because now you're going from, let's say you have 5 credit cards for that $10,000 debt. You're going from making 5 payments a month to 1. Right. Now, the worst thing you can do in that is get that installment loan, pay off all those credit cards,
and then go back.
Now you created double debt, and you're in a worse situation than before.
Right.
Worst thing you can do. But it works. That works for boosting your score if you're just battling revolving debt.
What other type of loans can you get?
So consolidation loan, personal loan. 2 companies I know that will give them out is Upgrade, and Upgrade will do a pre-approval where you can check your credit through them without getting a hard pull initially, and they'll let you know if you qualify, and then you can finish the application, and then Achieve as well. The only thing I would say you have to be careful with like Achieve, they have what's called a consolidation program, and you don't want to enter into a consolidation program if your credit is salvageable, because they're going to tell you to stop paying all your accounts and let them start reporting late until they close. Your score is going to continue to tank, and then they're going to say you start making monthly payments to us, and we're going to negotiate these debts for you, and you'll be in that program for about 3 years making payments to them, and once you get so much, then they'll try to settle an account. You better off selling accounts yourself, than going through what they're taking you through.
And just so you know, from a lending perspective, as far as that goes, I tell people this because a lot of times they're not aware, but an underwriter basically views that as a Chapter 13 bankruptcy for the purposes of qualifying for a mortgage loan. So it's really not a good idea using a debt, not what you said as far as applying and qualifying for an installment loan, but the part about getting a debt consolidation.
Debt consolidation.
Right. So a debt consolidation is going to be viewed the same, it's equivalent in an underwriter's eyes to a Chapter 13 bankruptcy. And so when they underwrite, I was going to say we, because not really me, it's them. But when it's underwritten, then they're going to view it the same as if you had declared a Chapter 13 bankruptcy. So you don't want that. Maurice's idea is a whole lot better. Before you get to that point, just go ahead and get the installment loan, pay them yourself, and then just make that one monthly payment, and just make sure you keep up with that payment, because you don't want to, go from having high utilization to now, 30 and 60 day lates on an installment loan, because even though it's only 10%, it's a late.
It don't affect you the same.
Right. That don't matter.
Yeah. Well, Maurice, how do we get in touch with you, and maybe tell everybody a little bit about your program since we wrap this up, right?
All right. Well, let's put this car in the garage then. You can get in touch with me. Dion has my number, 773-679-2162. You can connect with me via Facebook. I'm not very active on social media, but I do get all my inboxes, notifications. You can also contact me through my website, which is www.thecreditrestorestation.com. But ideally, you can use the phone number posted here and shoot me a text. I'll send you a link, and we can set up a Calendly invite, and we can set up a time to talk and discuss your credit situation, evaluate your credit, and come up with a plan of action on how to get you back to Dion and Lisa. So, you can have a pool like that in your backyard and some floating in the background. Because they're going to find it for you.
Right. All right. Well, definitely get in touch with Maurice, because he does have some good tips and things to share with you as far as getting your credit together. Maurice, I think you also, sometimes you just consult. It may not always be a fee. Is that still the case? Like, you consult at first, or?
A lot of the time, just about all the time. I offer free credit evaluations. I don't charge for advice, guidance, or direction. I only charge if I'm hired on to address negative, inaccurate, derogatory accounts and credit score boosting with the use of trade lines if needed. Y'all like that?
We like that. Yeah, that sounds very well rehearsed.
Right.
Good on that.
Right, and it flows out, right?
I do offer a lot of information, advice, coaching, and those things. The first step is to take a step. Let's take a look and see if credit repair is even what you really need. You just may need a little guidance.
Because you don't know what you don't know.
That's true.
Exactly. All right, guys. Well, we are so glad that you came and joined us today, because this is why we're here. We want to make sure we share with you important information, and credit is definitely top of the list, and making sure that you have that great credit, so Lisa and I can help you with buying a house, right?
Right.
All right. So
So once you got your credit together with Maurice, then you can always come holler at your girl.
House money
So I
now.
can go ahead and get you pre-qualified and send you out with that coveted letter that says that you can buy a house.
Yes, yes. So get in touch with Lisa. This is her number here. Maybe you don't need credit repair. We always say start with Lisa. So even though you may need credit repair, I would say start with Lisa first, and then she will connect you with Maurice if it's definitely needed. And then you can always contact me as well, and I can start discussing with you about homes and what your dreams are, and before I send you to Lisa and then to Maurice if needed, and then we all come back, because in the end we're here to get you where you need to be. So
It's your team, your real estate team.
That's right.
yes. Yeah. Thank you guys. Thanks for joining us. We're so happy for you to be here.
Goodbye, everybody. We'll see you next Wednesday.
That's what I was waiting on. Lisa crazy.